sense. Investing in crypto could be like getting in on Google on the ground floor. But that's when you say that sounds absolutely great. Or it could be like getting in on Google Glass on the ground floor, and that turned out to be a one-story building. That was a single.
Hey, what's going on? It's Jake with Chain Genius, back for another episode of the Crypto Daily Update. I hope everyone had a great weekend. And hopping right into it, the clip you just saw and all over various subreddits is from John Oliver's show. Last night he did a 20-minute segment on Bitcoin, blockchain, and cryptocurrencies and just talked about them from a pretty high level. And overall, I think he did a really good job of conveying the idea of what they're doing from a very basic standpoint. And I agree with most of the points. At the end, he ended up dumping on EOS a little bit, which I'm torn about because I like EOS as a project. I think Dan Larimer has the opportunity to do something pretty cool with this as a Gen 3 blockchain. However, I do agree about the points of not needing to necessarily raise $1.5 billion for what is still a non-functioning, non-existent product. But the thing I really enjoyed about the show is, first of all, he talked about a new hashtag, Crayful instead of Careful Gang or Hodl Gang. And I really like that the main message he was saying is that a lot of this stuff is speculative right now. When most armchair investors in the space buy into a coin, they're strictly looking at whether or not it's going to moon. They don't look at any of the fundamentals. They don't look at the actual valuation. And even though these are different than traditional assets, you should be really understanding and looking at, is it worth the value that it currently has? And most times it's really not the case. Even myself, I'm super bullish on Neo and Ethereum and Cardano long term. And since Ethereum is the most developed currently, is it worth its current valuation? I'm not sure. I think it's probably overvalued, but it is one of the best functioning out in the space. Besides that, he goes on to just talk about how young the technology fundamentally is. We're less than a decade in. The technology still hasn't really been brought into the mass adoption cycle of the tech curve yet. You need to just keep a sound head on your shoulders. And I really agree. That's the whole Crayful Gang hashtag that he kind of emphasized, which I thought was really a really nice thing for him to do, because it says, get into the space, only invest what you can afford to lose, use your best judgment, don't let emotions play into this. If you've been in investing at all, these are all consistent recommendations that you hear from the space. Is always just don't let emotions rule your strategy for investing. You know, going over to the market, as of right now, it's 371 billion market cap, still hanging out below the $400 billion, still moving sideways. From a 7-day, we've pulled back a little bit more and still consolidating. Overall, I hope this is towards the end, not being able to predict the future. I really think we should be getting near the end of the consolidation over the next couple of weeks. There's been some buy orders. I couldn't find the link for it, but there's been some pictures and conversations about buy orders for a few million Bitcoin on Binance. And if you believe that institutional investors are not building their position in crypto, that's a foolish thing to believe, because those with the money are going to push the market the way that they want to in order to drive value investing. Some of the other things that are going on, it was a little bit quiet this weekend, which is not always a bad thing. Give yourself a break, get away from the computer and out of your house. But something I thought that was interesting is Cryptomatotoes. A company is using greenhouses that are heated by, what do they call them? Cointainers. So what they're doing is they're using the excess heat from mining cryptocurrencies and then venting that hot air into a greenhouse, which they're using to grow 5 acres of tomatoes. And I thought that was interesting because recently on TechCrunch there was another article about a company called Carnot that unveiled a cryptocurrency heater for your home. So it starts out mining Ethereum. It's got a couple GPUs in it, and then if the excess heat is not enough, it can turn into a full functioning heater and push out additional heat. But I thought it was interesting because you're seeing more and more people in the space, and this is good because it leads to the idea that mainstream adoption is slowly coming up. And since heating and waste of electricity is always such a big argument, it's nice to see companies or individuals are trying to find a way to repurpose that excess heat. Carnot takes none of the coin, you keep 100% of your cryptocurrencies, but that's in exchange for you paying $3,600 for a heater. So you have to calculate, is the cost of the electricity, the mined Ethereum, or other coins going to be offset by the ambient heat that your house is provided during the winter? I don't know. Still, I thought it was a really cool idea with what's going on in the space. Something a little bit different here is in the city of Kranj in Slovenia. As of right now, they are unveiling the first Bitcoin logo as a centerpiece for a roundabout, which is one of those traffic circles, in case you don't know. But what was interesting is it was paid for partially by Bitstamp, as well as another one, 3FS. And it's a cool idea. It's the first kind of artistic piece that you've seen on a big scale brought out, and now you can probably go check it out on Google Maps. One of the other things I wanted to point out is Trinity for Neo, which is their equivalent to Raiden for a simple description. They just recently did a really cool AMA, and I think it's worth checking out. I don't want to dive too deeply into this, but if you're interested in off-chain scaling solutions, or you know about Raiden but haven't read up about Trinity, it's definitely worth a read. Neo is one of the projects that continues to impress me. They have some issues for sure, but they continuously are pushing out updates, pushing out technology, and driving forward the development. And one of the top questions that I did want to talk about is they mentioned, can Trinity scale other blockchains because of the way that it's set up? And would all of Ethereum have to use it, or could individual dApps use it on a case-by-case basis? And he talks about Neo is still the priority. Trinity Network, after a longer time of development, will become autonomous and be able to serve other blockchains and help them scale with minor adaptations. And the scaling would be opt-in, so other networks can choose to use it versus mandatory opt-in from the whole network, such as Raiden. So I just thought that was really cool, and I highly recommend that you jump in if you want to get an idea about masternodes, scaling, how they're going to handle congestion, development roadmaps, pretty much anything you could want to know about it. Something else in the news that was really cool is Vitalik recently talked about a new Plasma Cash protocol, and the way this would work is it would build on top of Plasma's scaling solution. And what it would do is, the use case that he specifically talked about is that if you deposited money into an exchange or crypto into an exchange, it would create a plasma coin that would hold equal value with a unique ID to you based on the holdings that you put in. And what's interesting about this is it makes it extremely hack resistant for these exchanges, mainly because each plasma coin has a distinct owner, and because they're not fungible, and because they're not interchangeable, like a single Ethereum can be chopped up, remixed in different owners. They're all the same coin. But since it's non-fungible, no one can take the coin from you because it's tied to a singular identity ID, which is really interesting because once someone attempts to do that, it notifies the owner of that plasma coin, which is effectively a derivative or a substitute for what coins you were originally putting in. So it could be a really cool way to prevent fraudulent withdrawal through a complaint system by showing proof of data for the coin's history and tied to your ownership. Again, either way, it's really cool because we're still seeing new use cases for technology that's in development. First of all, we need to get Plasma up and running, but it's interesting to see an additional use case outside of that. On VertCoin news, this is pretty exciting. VertPig is launching the British pound to VertCoin listing, and this was mentioned a couple days ago, but as of right now, it's actually live, the beta. It's only being tested with a really small subset of users while they work out the kinks, but what's so important about this, for those that don't know, VertCoin is a fork of Litecoin. It's ASIC resistant, and it's really cool to see this because one of the biggest barriers to entry with a lot of cryptos is going from fiat to crypto, or your home currency, US dollar, yuan, British pound, whatever. Being able to go from that currency to crypto is really tough. And anytime there's a new way to do that, even if I don't necessarily love VertCoin, I'm very pro VertCoin. I think they're going to struggle to stand out from the pack long term, but they're doing a lot of really cool things in the space. The community is really solid and it's not toxic like a lot of the others can be. But in general, VertPig, if it proves successful, could be huge because it creates another fiat onboarding ramp. Right now they're testing it with a small group. Only 120 people were pre-registered and verified. Either way, I hope this goes really well. Huge potential upside for them if they can make that happen. Finally, it looks like Facebook, who recently removed crypto-related ads to ICOs or token generation events, it turns out that Google might be following suit. They're getting the same sort of pressure where it looks like that Facebook made this decision because they were getting pushed by the FBI as well as some Canadian regulators. And whether this is good or bad, I'm mixed on this because I agree a lot of people are uneducated investors. It's just the way it is. People make poor decisions and just do the lemming mentality and just follow everyone else and FOMO in. So I can understand from that side you want to protect investors that are less educated or less well informed. But on the same side of it, it creates a tighter echo chamber where you're only going to see crypto advertisements on crypto websites from people who already know crypto. So it creates a really small echo chamber. And I've mentioned this before. If you're on a lot of these subreddits, if it's a specific token subreddit, it's an echo chamber. 99% of the time, all the posts are about how great it is, how much return you're going to get, when it's going to go to the moon, and they praise the head figure like a Jesus type figure. And it can be unhealthy. So I'm not sure if this is the best thing, but I understand where they're coming from protecting investors. Mixed response is what I would say. So that's all I've got for the moment on this Crypto Daily Update. If you like what I'm saying, please hit that subscribe button, ring the bell, tell your friends, and leave some comments. Until next time, peace.